In this video, we're going to explore what would have happened if you had invested $10,000 in the ASX, Australian Securities Exchange, 10 years ago compared to investing the same amount in gold. We'll also list 10 pros and cons of investing in the ASX and gold. First, let's look at what would have happened if you had invested $10,000 in the ASX 10 years ago. If you had invested in the ASX 200, your investment would have grown to approximately $25,000 today, assuming that you reinvested your dividends. Now, let's compare this with investing $10,000 in gold. If you had invested $10,000 in gold 10 years ago, your investment would have grown to approximately $20,000 today, representing a lower return than investing in the ASX. Now, let's move on to the pros and cons of investing in the ASX and gold. Pros of investing in the ASX. Higher returns. The ASX has historically provided higher returns than gold over the long term. Dividends. Many companies listed on the ASX pay dividends, which can provide a regular income stream. Diversification. Investing in the ASX can help diversify your portfolio and reduce overall risk. Growth opportunities. The ASX provides opportunities to invest in growing companies that can potentially provide high returns. Liquidity. Many ASX-listed companies have high trading volumes, making it easy to buy and sell shares. Tax benefits. Some investments in the ASX can provide tax benefits, such as franking credits. Professional management. Investing in the ASX provides access to professional management of your investments. Exposure to multiple sectors. The ASX provides exposure to a range of sectors, including finance, healthcare, and resources. Transparency. Information on ASX-listed companies is readily available, making it easier to make informed investment decisions. Access to international markets. The ASX provides access to international companies and exposure to global markets. Cons of investing in the ASX. Market volatility. The ASX can be unpredictable and volatile, which can impact your investments. Risk of loss. Investing in the ASX carries the risk of loss, and there is no guarantee of returns. Time-consuming. Investing in the ASX requires research and monitoring, which can be time-consuming. Fees. Some ASX investment options, such as managed funds, may charge fees that eat into your returns. Lack of control. When you invest in the ASX, you are entrusting your money to someone else and may have limited control over how it is invested. Scams. The investment world is rife with scams and fraud, and it's important to be cautious and do your due diligence. Lack of liquidity. Some ASX-listed companies may be illiquid, making it difficult to sell shares quickly. Emotional investing. Investing can be emotional, and it's important to stay disciplined and avoid making impulsive decisions based on fear or greed. Economic factors. Economic factors, such as recessions or interest rate changes, can impact the ASX. Lack of diversification. Investing solely in the ASX can lack diversification, which can increase risk. Pros of investing gold. Hedge against inflation. Investing in gold can help protect against inflation, as gold prices tend to rise with inflation. Safe haven asset. Gold is often considered a safe haven asset during times of economic uncertainty, as it holds its value and is not subject to the same market volatility as stocks. Diversification. Gold can help diversify your portfolio and reduce the overall risk of your investments. Tangible asset. Unlike stocks or other financial instruments, gold is a tangible asset that you can physically hold. Low correlation with other assets. Gold has a low correlation with other assets, which can make it a good addition to a diversified portfolio. Limited supply. Gold is a finite resource, and its supply is limited, which can increase its value over time. Store of value. Gold has been used as a store of value for thousands of years and has maintained its value over time. International acceptance. Gold is recognized and accepted globally, making it a liquid and easily tradable asset. No counterparty risk. When you invest in gold, there is no counterparty risk, meaning you don't have to worry about the solvency of a company or institution. Potential for high returns. Although gold is generally considered a long-term investment, it can also provide high returns during periods of market uncertainty. Cons of investing in gold. No income. Gold does not generate income or dividends, meaning you can't earn a regular income from your investment. Volatility. Although gold is often considered a safe haven asset, its value can still be subject to volatility and fluctuation. Storage and insurance costs. If you physically hold gold, you may need to pay for storage and insurance costs, which can reduce your returns. Limited use. Gold has limited practical use, and its value is largely derived from its perceived worth. Lack of control. When you invest in gold, you are entrusting your money to someone else and may have limited control over how it is invested. No cash flow. Unlike stocks or bonds, gold doesn't provide any cash flow, so you can't use it to generate income. Potential for loss. Like any investment, there is a risk of loss when you invest in gold. Economic factors. Economic factors, such as interest rates or currency fluctuations, can impact the value of gold. Price manipulation. There have been instances of price manipulation in the gold market, which can impact its value. Not always a safe haven. Although gold is often considered a safe haven asset, there is no guarantee that its value will rise during times of economic uncertainty.